Nvidia's stock moves lower after its CEO defends the company's position as AI chip leader. Michael Landsberg of Landsberg Bennett Private Wealth Management. Why the negative investor reaction?
Lisa, I think it's not necessarily a reaction to the announcement as much as we're in a trend now where the economy's slowing a bit. There's concerns about tariffs. And bluntly, everybody and their brother owns these names. So what's happened is there's an overexposure to them. I think people have realized, okay, maybe I need to take some of the exposure down. We're not less bullish on AI, but in the short term, you certainly have to be after the run it's had. And, chips, certainly have some subject of some tariff issues. So, growth is slowing a bit. There's a tariff issue. So there's enough reasons. I don't think Jensen can wave his hand and just kind of get the stock to move higher. I think there's some fundamental issues about this, at least in the short term, that I think people need to look at and say, hey, I've got too much of it. I need to probably reposition myself to be set up for the rest of the year.
So it seems like you just answered my next question, which is you don't view this as an opportunity to buy on the dip because other chip makers are down today, including Broadcom.
Yeah, I wouldn't buy tech here on the dip. I think this is, we've had a couple good years. I think this is an area where we're entering an environment where growth is slowing, yet and inflation is slowing. Typically, that's not a great time to be looking at tech. I think there's other areas of the economy you could look at. Specifically, I like out of the country right now. I think Europe is really an opportunity here. They've got growth. They've kind of been behind us a couple of years, and I don't have any of the issues, with growth slowing that we're having here in the U.S. So I think you don't want to buy the dip here in the U.S. I think you want to look and buy some things that are working overseas.
We had two positive stock sessions before stocks went into the red today. Where is the bottom to this market?
Yeah, I don't think you're going to see a bottom for a little bit, specifically in tech. I think you've got some issues to work around. I think some decelerating growth is going to kind of hit the market. Plus, we don't really know what's going to happen with tariffs. So I think when you're in an environment where there's a reason to sell, growth, slowing growth, tariffs, there's not really a real impetus to buy. And so I think that's what's happening is you've got some more sellers, if you will, to raise cash and position themselves with some unknowns in front of us. Coupled with the fact that we've had a couple of good years. So it's not hurting anybody to take some money off the table. They're playing, if you will, with house money, taking it off the table, putting it aside till we get some clarity around tariffs. I think it makes some sense for a lot of investors. And I think that's what you're going to see. There's a rotation, if you will, to some stuff that's held up. We favored, for example, insurance stocks and utilities in the US because they've held up during this period of time. And I think, again, most investors are overweight tech. And so that makes sense that a lot of the selling is coming from tech land.
So I hear you talk about sectors. Is this also an individual stock pickers market? And if so, do you have individual stocks that you recommend?
Absolutely. I think when you get in an environment where things are starting to decline, individual stocks are critically more important. For example, in utilities, we like NextEra, which is the holding company of Florida Power and Light. It's got a great demographic story. Lots of people want to move to Florida. It's warm. We've got, there's no income taxes. And so you've got a stock that's trading about 15% off of its 52-week high. You're getting a dividend. And it's also a little bit of a play on nuclear and solar. So I think you get a little bit of best of both worlds without having the risk of a solar only or a nuclear only play. So we like that one. Progressive insurance, inside the insurance space, we like. I never vote against insurance companies. They always figure out how to make money. They raise their premiums, whatever it would be, and they can consistently have double-digit EPS growth. We think that's a name that we'll continue to like and should hold up well here. And again, we don't like small cap. I would tell clients and investors to stay away from the small cap market. It's been a loser for the last 3.25 years, the Russell 2000 index. There's no reason to think that because it's gotten cheaper, it's going to be any better. I think you could do well to stay away from that.